Hi everyone, welcome to this YouTube video where we are covering the Nifty 50 companies, and today it's time for number 49, which is Cipla Limited. I would highly advise you to watch this video at 2x speed, just for your own benefit because I talk slowly. Okay, so what we're gonna discuss in this video are definitely we'll try to understand the business of Cipla, the industry, the business, how the revenue has been going, how their quarterly performance has been going, what are the key variables which are tracked for the business. So this becomes a little advanced as we keep going on further. And then we'll also see the future growth prospect, what the company is guiding us towards, right? So this is how we'll structure this discussion on Cipla, right? And starting off, we'll start off with the industry context, right? So Cipla is a part of the pharmaceutical industry, right? The Indian pharmaceutical industry is it supplies roughly 20% of the global generic medicine volumes in the world, right? And it also holds the largest number of US FDA approved sites in the world after the US, right? So the US holds around 2000 approved sites and India holds around 500 or I think 600 now. China holds like 300 to 400, right? So those are the top three countries. And this is this kind of signals that India plays a big role in the global pharmaceutical industry, right? Now, if you look at the value chain, just to understand these kind of companies better, what really happens is how is a drug or a medicine, or let's say a medicine tablet that we consume is formed, right? What happens is the raw materials. So there is something called the key starting materials, which are used to form intermediates, and then that is used to form APIs, which is the active pharmaceutical ingredients, which is kind of the main chemical in a drug, right? And then those are sent to formulation manufacturers who kind of formulate it into their finished dosage forms. So some of the popular ones is of course tablets, then you can also inject it, you can inhale it, right? So this is where Cipla comes into the picture, where it is mostly a formulation manufacturer. And then of course, once these are made, there are distributors which will distribute it to the various retail pharmacies in India, and then the eventual consumer will buy it either from the pharmacies or from hospitals directly, right? Distributors and stocks. So distribution in India is very, very fragmented. There are a lot of regional distributors. It's also a lot of organized versus inorganized. So the organized sector is only 10%. So that's a separate topic, but yeah, the pharma distribution sector is also going through some changes in India, right? But we'll focus on the pharma sector. And next, what we'll think about is what are the classifications of the various companies in the pharmaceutical industry, right? What are the different types of companies, just to get a better understanding and see the bigger picture before we dive into Cipla. So there are how we can think about it is in two ways, as shown on the portal. So one is the product complexity and one is the geographic revenue mix. In terms of product complexity, both are actually pretty similar, pretty easy to understand. If the company is making easy generic drugs, that's one kind of a company. If the company forms slightly complex generics, then that's the second kind of a company. And then there are more advanced and more complex products which companies can make, and which is like biosimilars or biologics. And these are actually formed from live living organisms, living materials. So it's very, very complex to have that accuracy and to make these products. So these are highly complex. In terms of so Cipla comes under the complex generics, which is better than obviously commodity generics because anyone can make them and there's hardly any, it's a commodity, right? It faces the same problems as any commodity does. And quickly going through the geographic mix. So some companies are India dominant, some companies are US dominant. Cipla is more of a diversified multi-market, and this we'll see later on in the revenue distribution as well. But Cipla kind of has a diversified market in which it sells, right? So yeah, we'll dive deeper into other sections very soon. All right, so moving on to finishing up the industry section, there are some regulations, the tailwinds and the headwinds in every industry, right? So in terms of regulations, there is the labor code regulations, but this impacted every company across the board, so that's fine. The US FDA inspection is very interesting because this is some of the regulation, well, not government regulations, but the governing body will inspect these manufacturing sites and will give you green flags to manufacture products, right? It's a big thing in this industry, and it makes sense, right? These are products which are directly going inside our bodies. They are highly effective. They need to have very high standards of manufacture and inspection to keep the quality high, right? So this makes sense. In terms of tailwinds and headwinds, there's nothing major to discuss as of such. So I'm going to move on from those sections and go directly into the business of Cipla, right? So now we've understood that Cipla is, where does Cipla come into the picture, right? It is manufacturing kind of complex generics. It is a multi-region focus, right? It was founded in 1935, 46 manufacturing facilities across a number of countries as well, right? And if you look at the business segments, this is where things get interesting. So if we see the revenue mix by segment, One India has around 40% of the mix. North America has around 28% of the mix. Africa has around 14% of the mix. And then comes the emerging markets in Europe with like 12%, right? So this is very interesting, and that's why we said it's a multi-market company with India leading the way for it, right? It's the core engine, it's stable. North America has been declining in recent times, and we'll get into the reasons of that as well. But we see that Africa and Europe especially has been accelerating in terms of the mix. And I think we might have the mix shift as well. So if we see the mix shift, right, what we clearly see is that India has maintained a stable 40 to 43% share of the revenue throughout this period, right? There was a marginal dip in FY25, right? But that was more to do with the US revenue rising rather than anything to do with India itself, right? So there is no structural weakness in India, and we can clearly see it's kind of stable as is the label over here, right? When it comes to North America, their share peaked at 30% in FY24, right? When a lot of their drugs were contributing simultaneously. And the decline in the 9 months FY26, which we see from 25, they went up to 30, and now they're back to 25, has to do with them, has to do with the revenue, with the revenue cliffs which this company has faced with respect to their drugs. And there's also been some supply disruptions, which we'll also get into very soon, right? In terms of emerging markets in Europe, you can see the label there. It's saying gradually becoming relevant, and we can see it's kind of climbed from 10% to 13%, right? It's also nothing more to say about that, but yeah, this is interesting. A mix shift by the company, right? And if we just look at the revenue trend, what's very interesting over here is, of course, there are no, the business doesn't formally report revenue by segments. So we're looking at the overall revenue. And while the revenue has grown at 10%, EBITDA has grown at 14%, and PAT has grown by 29%, right? So we can clearly see that the revenue has grown by a steady 10%, accelerating from FY23 onwards as the US differentiated assets started contributing, right? The operating profit, which is the EBITDA, has outpaced revenue growth, which reflects the margin accretion which happened, right? Margin went from 22% to 26% in FY25, right? And now the margins are under pressure once again, right? And the margins have dipped considerably to 17% in the latest quarter, right? And we'll get into more details as we go into the quarter analysis of the company, right? Which we'll take up in the next section. All right, getting into the quarterly scores of the company, the reading is not very good. It is having scores of 6.5 to 4.5 now in the latest quarter. So already it wasn't very good, and it's dipped much more in this quarter. Let's see what's been happening in the company, right? There's a leadership transition which is going on with the company, which Achin Gupta is designated to take over as global CEO from Umang Vora, right? There was something similar which we'll see in the previous update as well, right? So for 2 quarters, there's a big leadership change which is happening in the company, right? If you look at their results, there's really nothing to see. There's 0% revenue growth, but the EBITDA margins have taken a serious compression. And what the reasoning is behind this is that firstly, the company said that the full year guidance had been given of 21%, right? But the EBITDA fell even more than what the company had guided. And this is due to the exit of their high margin drug Revlimid and their they have been doing higher R&D and manufacturing investments, right? So of course, this is part and parcel of the nature of the business, right? But there's also been what is not part and parcel or shouldn't be part and parcel of the business is that there has been a supply disruption for another of their drugs. Right now, I'm not very familiar with these drugs, and I don't follow Cipla for a long time. But what's recently happened has been production has been paused for one of their drugs following 9 observations at their partner's facility, right? So what their partner now needs to do is they need to fix these issues which the FDA has observed. They need another clearance before their production can restart, right? So this is not good stuff. And when we earlier investigated why the US revenue mix had gone back to 25% in these 9 months, it is due to these 2 factors, right? So the company is facing margin compression already. It was anchored to 21% from 26% highs in the past couple of years. Already it was anchored to 21% in this financial year, but the quarter was really poor for the company. And now quickly moving on to some key variables for the company, right? A lot of key variables were considered when we want to analyze this company, but what is shown on the dashboard are the main ones which have the most importance, right? And number 1 in this comes the US revenue, right? Now, why this is really interesting is it is in $1 million, right? And quickly, if I go to their guidance and what is the big picture growth for this company, they want the US business to become $1 billion in sales by FY27, right? $1 billion is what they want. And right now, if you see in terms of quarter by quarter, there's been a decline from a peak of 241 millions to 167 million, right? That's a 31% drop. Obviously, we've already discussed the reasons behind this, right? The full year FY25 was a record 934 million, but it doesn't look like it's gonna touch those same figures, and there's gonna be a bit of a decline when it comes to US revenue. So I don't know how they're gonna hit their big picture growth, but this is what's been happening. Also, there are a few other key metrics. There's the India chronic portfolio share. You can see from 55%, it has gone to 62%. It is a structural quality improvement, right? Because this is in the chronic therapy. So that's a kind of a good quality business to be in when it comes to a pharmaceutical company, right? The number of 100 CR brands has been expanded from 15. That has nearly doubled in 4 years, right? So that's really good. The expansion has been driven by therapy broadening, and that's indicating a healthy franchisee brand beyond the respiratory anchor, right? So respiratory is kind of big for them. I think it takes around 60% of their revenues, if I'm not wrong. So it's good that they are building brands in other sections as well, right? And after this, we'll dive into the future growth prospects of the company. So now quickly covering the future growth of this company, it's gotten a score of 7.1, which is pretty average if I'm being honest. Of course, compared, it's a Nifty 50 company. It's a heavy company which doesn't move as fast, right? But let's see what's happening in the growth prospects, right? There is a pipeline of 4 launches which are expected in FY27, right? So, and not only that, the US peptide pipeline also has 3 assets which are expected to launch this year, right? So the pipeline does have some products which are going to launch very soon. Let's look at the top growth catalysts. There were a few other ones also considered, but in terms of the priority and the impact, these were the ones which were taken up, right? So as I said, the US respiratory pipeline has launches, the US peptide pipeline has launches, right? So this is how a pharma company is going to grow. They'll have these great drugs which will give them great revenues, but then there's going to be a revenue cliff, and then they need to keep upping their game, and they need to keep either diversifying into different streams of drugs, or they need to find these new launches which are gonna replace those earlier blockbuster numbers, right? In terms of scenario analysis, with a high confidence, the system is saying 12 to 15% growth over the next few years. I would say let's anchor more towards the 12% rather than the 15%, right? And obviously, no one can predict the future. These are like probabilistic view of how this company can grow. It can be anywhere from less than 10 to more than 16%, right? But it looks like it might be around somewhere in the 10 to 12% range. And in terms of what the management has been guiding for, right? As I said, of course, this is directional guidance. They don't give you exact numbers. There's no formal number that they want to hit. In terms of the big picture growth, I think we've already discussed that they want one of the guidance they have given is they want the US business to reach 1 billion in sales by FY27 next year, right? It was already something like 950. It has been going through a tough time this year, so let's see if they'll be able to meet their goal or not, right? If we look at the revenue guidance for the last 3 years, FY26, FY25, and FY24, right? For this year, what they've been saying is that they want to retain their guidance to grow their top line, and they haven't provided specific revenue percentages, right? So we're missing any specific numbers, but what they're basically saying is that, yeah, we want to grow our top line, right? Over the next few quarters, we have some launches, right? So this is what's been happening in terms of revenue guidance for this year. In FY25, what happened was EBITDA margin exceeded the higher end of the guidance range by 140 bips, and revenue growth was in line with market expectations, right? So the guidance given was with respect to EBITDA margins that they would have something around 23 to 24, and they finally wound up by 25. So that was a beat in terms of the margin guidance, right? And this is one company which is always giving a range for margins that I've observed, right? So it's kind of good that they are providing it, they are revising it down when they know something is going to happen. So in terms of that, the credibility verdict has been given as credible to this management, right? And there are a few other guidance items in terms of the margin, as we've already discussed this one. The resupply issue also we have discussed, right? These are also being tracked on the portal, right? But yeah, with that, the analysis of Cipla comes to a close. We've used the portal of Story of a Stock to analyze Cipla. This is a platform which is kind of acting as a fundamental screener for companies. And we kind of they have this 7-step framework through which we went and kind of discussed the company. Good from a beginner's point of view if you're hearing about or listening about Cipla for the first time. But if you've been tracking Cipla for a long time, there was also some information on this portal in terms of tracking and what are the growth going to look like.